Okay, so in this video, we are going to look at the analysis method of incomplete records. So under the analysis method, we are able to prepare the SOPL, the statement of profit or loss, and the statement of financial position, because we now have enough information to calculate the correct combination of revenue against expense to give you the profit answer. So since we are preparing the SOPL and the first item in the SOPL is sales, so as you have learned before, sales comprises of credit sales and cash sales. Okay. However, there are some questions which might not have credit sales, they only have cash sales, then your total sales will be the cash sales. Or it can be the other way around. There is no cash sales, there's only credit sales, then that will be your total sales. But however, most questions come with some credit sales and some cash sales. So you need to look out for both of these and add them up. And that would be the total sales to be recorded in the SOPL. Okay. So for cash sales, you can find it on the debit side of the cash book. So you'll be given a cash book. Okay. So all you need to do is go to the debit side and look for the description called sales. Okay, that would be your cash sales. However, there would be some questions whereby the cash sale is not recorded in the cash book, but it is given as an additional information. So these kind of more difficult questions, we will look at it later. So now we are looking at the most basic kind of questions whereby you are given a cash book and all the cash sales have been recorded in the cash book. All right. So as I mentioned earlier, if the cash sales is not recorded in the cash book, we need a separate method for that to capture the cash sales. That is via opening a cash account. So we are not looking at those kind of situations now. Okay, so for credit sales, we have to, because we're not given a trial balance, right? So credit sales is connected to trade receivable. So therefore, we need to use our knowledge learned in trade receivable to capture the credit sales without having to construct a trial balance. So we will be given information on trade receivables like opening balance, closing balance, what's the amount received as a payment from them, any irrecoverable debts. So put in all the necessary information and we can calculate the credit sales. So here is an example. Okay, in this question, we have to prepare the SOPL and SOFP, but the question starts with asking you to calculate the sales and purchase. So I'll deal with the sales first. Yeah. So the sales figure given here is 25,050. Okay, now how did I get this 25,050? There is some cash sales and some credit sales in this question. Now, the cash sales is 4,550. And how do I get that? This is the cash book. I refer to the debit side. Straight away, this is the cash sales figure. As I said, the description must be sales, not trade receivable. If you pick trade receivable, that is not cash sales. That is amount collected from trade receivables now for a credit sales made earlier. So that is not what you should pick. You should make sure the description is sales. Okay. So hence, we have picked up our cash sales. Now, what about the credit sales? So the credit sales answer given here is 20,500. And this is my working. Okay, I open up a trade receivable control account. So let's go through them one by one. So we have the opening balance here, 4,200, which is what I picked up here. We have we know how much trade receivable paid us during the year. So since we are debiting the cash book, this could either be cash or bank. The question is not clear about that. So we have to credit the trade receivable. Okay. So apart from this, we do not have other information like irrecoverable debts or sales return or discount allowed. But if you have those items, then you should put them on the credit side. Okay. Finally, we have the ending balance of trade receivable, which is 4,950. So that goes to the credit side as per your format. So once we have put in these three yellow colored figure, we balance up the account. So that means originally it looked like this, right? So you can see your credit total is 24,700, debit is 4,200. So the difference between these two totals is your credit sales that we're looking for, which is 20,500. So finally, we add up both these figures to give us 25,050. Okay, so next, since there's no sales return, we can skip. So next we go to cost of sales. So opening inventory comes from the opening balance here, 3,590. Okay, next we have purchases. So purchases comprises of cash purchase and credit purchase for this question. So the cash purchase is 2098. So how do we get the cash purchase? As mentioned here, to get the cash purchase, you go to the credit side of the cash book and the description should be purchases. Okay, purchases. So this is the description that we want. The description is purchases and it's appearing on the credit side. So this is our cash purchases. You should not pick payment to trade payables for the same reason as I mentioned earlier with the receivable, because this is what we are paying suppliers now for a credit purchase made earlier. This is not what we should pick. We should pick this one. Okay, so this is our cash purchase, 2,098. Okay, to get the credit purchase, we open a trade payable control account. We put in the figures that we know, the opening balance coming from here, 3,295. Okay, and then we put in the payments made to trade payable, 11505, coming from here. And then there is no discount received or purchase return. So we skip that. So next we put the ending balance, which is coming from down here. So putting these three figures, we balance up the account and we will get this credit purchase figure, 11195. So therefore, the total purchase is the cash purchase plus the credit purchase, 13293. Okay, then the closing inventory comes from here, the ending balance. So therefore, our cost of sales is 12683. So therefore, our gross profit is 25050 minus 12683, and it is 12367. Okay, so after gross profit, we need to look out for other income. Okay, so this is mentioned here. So examples of other income that you should be familiar with by now is like a discount received, rental received, commission received, and so on. So now, since these are income, okay, remember income can be cash related and non-cash related. So to find the cash income, the cash related one, go to your cash book, debit side, and look for income. So this is not income, this is additional capital. We have already picked this one. So this is income. Okay, now this is income which came into, this is what we receive in money, but you should not jump to conclusion. You need to check whether there's any opening or closing figures that you need to adjust to get the true income, because this income could be partly belonging to last year, right? So this is where you need to check the question. Is there any accrued commission at the start? No, there's no accrued commission at the start or prepaid commission. Neither is there at the end. then only we can confirm that this amount received is also the amount earned. So commission is 255. As in, there's no adjustment needed. Okay, next we go to expenses. So for expenses, you can start by checking the credit side of the cash book, such as this one. Rent, so the same rule applies. You need to check whether there's any accrual or prepayment to be adjusted to this figure. So go back to the start of the year. There is no adjustment for rental. End of the year, there is no adjustment for rental. So therefore, this figure paid is also the figure incurred. So we do the same for salaries. Salary is 3660. No adjustments for salary at the beginning and end of the year. So we can put this figure. Okay, next is sundry expenses. So sundry expenses is 1,200. No adjustment at the start. No adjustment at the end. So 1,200 is the correct figure. Okay, next, insurance. Same, insurance, there's no adjustments at the start and also at the end. So we can take 480 as the incurred figure. Okay, now, not forgetting, well, we cannot take office equipment because that's a capital expenditure, that's not expense. Neither can we take drawing because that goes to the SOFP. Now, there could be some non-cash expenses, and the most common one that we have learned is depreciation. So as long as you have non-current assets, you need to look out for depreciation. However, well, we have non-current assets, office equipment. However, in this chapter, usually the depreciation method would not be straight line or reducing balance, although it could be sometime, but most of the time you have to use the other method called the annual revaluation method. Okay, so to calculate depreciation, if you recall this formula taught to you here, the net book value is now called carrying value. So the opening carrying value plus addition minus depreciation. Well, in actual fact, we want to find this figure. Okay, but we know what's the opening carrying value. The opening carrying value would be this figure, 2,500. Okay. Additions. We purchase equipment during the year, 500. And then the ending carrying value is this figure here. Okay. So when you solve for depreciation, you'll get the answer to be 300. So depreciation would then be 2,500 plus 500 minus 2,700. And that's how I got 300 here. So that being all the expenses that we have, we total up the expenses and therefore we get the profit for the year to be 3,682. So next we move on to the SOFP. So since we are not given enough information as to how much is the cost and how much is the provision for depreciation, so it's okay to give the value as a single value, which is the carrying value, previously known as net book value. So this 2,700 is the value that we should pick here at the end of the year. Okay, so we only have one kind of non-current asset. So now we move on to current assets. So this will be the closing inventory. Closing inventory should be the same figure as what we recorded here. Remember, closing inventory is the only item that you should record twice. Okay, next we have the trade receivable, which is 4,950 coming from here, the ending balance. And there's no mention of allowance for irrecoverable debts. So the next that we have to put in is the bank balance. So for this question, if you notice, there's a question mark here, which means you have to calculate the ending bank balance by yourself. So the method to do that is the, as I've been here, the opening bank balance plus total receipts minus total payment will give you the figure that you want. So the opening balance is given up here, 3225. Positive figure, so which means it's a debit balance. Total receipts, you have to total up all these receipts, 3,000 plus 19750, 4550, 255. Okay, for total payment, you need to total up the payments, all these. So I've already worked that out for you. So wait. Oh no, sorry, it's not worked out, but to get this figure, the opening balance is 3225. Okay, I'll put it down. Plus, so the total receipts would be, I have to key in all these figures, 3,000, 19750, 4550, 255. Okay, as for this is the total receipts. As for the total payments, so 11505, 2098. $3,300, 3660. $1,200, 480. And finally, 500 and 960. Okay, so this is the working, and this is the answer. So that's how I got 7077 here. Now, sometimes some questions, they will give you the cash balance here, and they will also include it on the debit side, the same figure. So then you pick only one because it's referring to the same thing. Okay. Sometimes some questions will not give you a cash balance here, and they will list it down here. So if it's not here, you need to look for it inside the cash book, either on the debit side or on the credit side, because sometimes it could be an overdraft. Okay, so beware. Right, so moving ahead, so this is the total current assets. Therefore, this is my total assets. So moving on to the capital side. So the opening capital, as mentioned earlier, should be opening assets minus opening liabilities. So since we are not given an opening SOFP, we can use these as the opening assets and opening liabilities. So the opening assets would be 3590 plus 3225 plus 4,200 plus 2,500. And there is only one liability here, which is trade payable, 3,295. Okay, so this is the working. This is the answer, and that's how I got 10,220. Then additional capital. So if you go back to the cash book, on the debit side, there's an additional capital here. So the double entry is to debit either cash or bank, because we're not given information whether we receive money in form of cash or check. But we have to credit the capital account. So crediting capital account means we are adding to capital account. Therefore, we have to add 3,000 here. Okay, and the profit for the year should be the figure that we obtained here, which is 3682. You copy it here. Then you add them up, you will get this figure, 16902. And then we need to less drawings. So for this question, the drawings represented drawing of money only. But in some questions, you might have drawings of money plus other forms of drawings. So what you put in the SOFP is always total drawings, money and non-money related. But for this question, there is no non-money related drawings. For example, non-money related drawings could be drawing of inventory, right? You should add that in. So for this question, there's only drawing of money, so which is coming from here. So therefore, that's the total drawings. So therefore, 15942 is the ending capital. And finally, there is no non-current liability for this question. So we only have current liability, which is trade payable. And the figure was what we picked up from here. So upon adding this up, we would get the same total. The capital plus liability is 18927. So what we want to achieve is these two totals being the same. And that's how we deal with incomplete records analysis method. Further to this, I will be discussing more advanced questions, because questions can get more advanced from here, whereby if the question gets more difficult, you might not be even given a cash book. You would have to work on ratios like margin and markup, which I've taught you earlier. So those kind of questions, I will put it in a separate video and we will look at it later.